All right, so today I want to go over time and price. So really, a lot of people overcomplicate this, or they misunderstand it because they just try to learn it directly from ICT, and it's something that it comes together over a long time, or at least it did for me, because there's not really any one good source to learn from, and it's just a bunch of bullshit jargon that kind of pollutes everything. And really, what it comes down to is understanding not only what times of day to trade, because a lot of people think that it just means kill zones, but it also just means what kind of behaviors to expect. And really looking at time as a factor that's just important as price. So whenever we're defining our edge, we want to make sure that we are, putting ourselves in the highest probability circumstances. So, if you're trading like indices, are you going to be able to sit there and maybe find an opportunity 24 hours? Yeah, maybe. But most of the consistent traders that I know usually are trading in the New York session for the most part. I mean, there's gonna always be somebody that says there's an opportunity somewhere else, but whenever you try to just look for opportunities all day every day, it's gonna be a little bit you're dulling your edge. So I think it's important to incorporate time and have an understanding of it and to incorporate it into your trading plan. So really what time and price is based on is, time is just important, and especially certain times like, the high or low of the day, the open or low of the day, the week, the month. And we're going to see certain behaviors of price action that'll help us indicate bias because there's going to be a lot of volume at certain times of day. So for instance, let's just draw out an example of a candle. So whenever we have a candle, if you read up here at the top, it says open, high, low, close. That's not always how candles form. Sometimes candles will form open, low, high, close. So on a day that we have an open, low, high, close, that's going to usually be a bullish day. So if we're talking about the power of three, I know you guys have been seeing some of the trades I've been calling out where we have these three boxes. And everybody's like, okay, what does that even mean?
Yo,
Like,
are you streaming? I don't see it. My bad. I mean to
oh
interrupt.
wow, everybody's probably. No, I'm glad you said that, honestly. I just now started drawing anyway, so
I
I'll
heard
enjoy
you
this.
clicking your mouse and was like, "What the fuck?"
No, it's all good. So I didn't draw anything except this open. So I'm glad you said that, honestly. Thank you, Nancy. But um, got it. Oh, I don't know how I get these. You don't get these notifications sometimes. Anyways, okay. So I know you guys have been seeing me call out all these power of three trades, and a lot of people probably just look at it like, oh, this motherfucker just drawing boxes. But a lot of the times, you have to look at it as a consolidation, where you just have price kind of ranging back and forth, manipulation, and this is a bullish example. That's why I put the open, low, high, close. Notice if we make it open, low, high, close. So we're gonna make the open first. If we have, and this goes in time or in hand with the Asian range. If you guys haven't watched my video on the Asian range, it's in this playlist that this video is gonna be posted to, and you guys can go back and watch. It's like the time efficiency series. Now we have a push down out of the range after the accumulation or the consolidation, and then we'll have a manipulation phase. And this is where a lot of people get tripped out because they want to see this perfect break of structure and then come down to like some order block down here. And whenever this has occurred, that's not going to happen because all of the liquidity has been stopped out under that range. We don't need to come back down on mitigate orders. There is enough liquidity here where smart money can just buy and push price. Sorry, excuse me. So if we're looking at price in this context, and we know to look for a consolidation and a manipulation, and then a subsequent expansion, it can also help to know when to look for this and understand what's going on. So the power of three is what it's called, is accumulation, manipulation, distribution. All of it's the same thing. But when we're looking at it to form candles, let's just say if we have a bullish candle. And when we see a bullish candle, we just look at it like this. But we didn't see this candle when it was like this. Because that candle at one point looked like that, or maybe even more like this. So what's going on when you start at the open of the day and there's nothing? We have usually a consolidation of some form. And this works best for Forex, I will say, in crypto, but you can use it on ES, but the concepts are the same. One thing that a big piece of advice that I can give you guys is to learn how to conceptualize things and learn how to kind of build mental formulas. So if we're looking at this in the sense that we have the open high low or the open low high close on a bullish day. So we'll have an open here. And remember, you see the low comes after. So we have the opening is going to be this consolidation right here. That's why I use New York midnight open. That's why you'll oftentimes see consolidation leading up to that point. Then we'll push down or up, and we're going to go over bearish example, but you push down usually into some old point of interest. All right, maybe a fair value gap, maybe an old low, maybe an order block. Again, it's just a framework, any area that you would find interesting that we went over in the last video. So when this is happening, we push down. We're going to look like this, right? Candle's going to look very bearish. A lot of people are going to say, you know, the price, oh, this looks bearish, like price looks weak, I'm going to short. But if the bias is bullish, based on your higher time frame structure, and sorry, I don't know why I'm coughing so much, but the higher time frame structure, then you know that if you're thinking like a market maker and you're looking for bullish price action on the day, you're not going to get shaken up by a little bit of this, because that's going to look like a buying opportunity for you. Because you got to think like, okay, well, if we are bullish, why would price get pushed down and take out liquidity? Just to go up. So whenever we look at time of day that's going to be happening, you're going to be looking around the New York midnight open for a daily profile. We push down, and you're going to see the price kind of bouncing around. And this is where, if you're very confident in your bias, you know, like for instance, if we have a massive green day, then where are you going to want to get involved? Let's just say if this is what the daily candle finished like, where would you want to get involved if you wanted to catch the whole day? And you want to get involved in this wick. Then I'm there. But what would that candle look like when you got involved there? Did it look like a wick? No, because we've already left that. The reason there's a wick is because price traveled there and traveled away from it during this time period. So we have to remember that the candle is going to be pushed down tremendously first. And that's going to be pushing into an area. You're going to look for that at around the New York midnight open. So same thing goes for a weekly candle. I want you to think of each I guess, let's think of it. Each week as a part of one of these phases. So for instance, on a bullish week, and this is why we went over, you usually put the high or the low in on Tuesday. So let's say if we have a week, and let's just say this separates each day. It's not going to be perfect, I get it. I'm not trying to waste all day. Let's say if the market comes in, usually on Monday, you'll see more of a range. It doesn't have to be a perfect consolidation, but it's going to be a ranging day. So on Tuesday, if you're on a bullish week, you want to see that range get manipulated. You might see that manipulation ensue on Wednesday. But usually if you're on a bullish week, and we are trending nicely, you want to see the start of an expansion, and you want to see a push away in price. So this looks pretty ugly. When you really look at it, it's going to be very similar. And not everything's going to be as perfect as you want it to be. But conceptualizing things helps you understand that, okay, if we are looking at time and opening prices as an area where we're likely to see consolidation, and then we're likely to see some form of manipulation, before we get into our trade, because if we're trading smart money, if you trade like I do, not just supply and demand, but if you're trading, trying to really understand things and really catch the move of the day or catch, bottoms, whatever you want to call it. I hate to use that term because it inspires degeneracy, but if you want to do that, you have to understand when that's likely to happen. You might get lucky and do it every once in a while without it, but if you want to do it consistently. So if you see price moving throughout the week or throughout whatever open, this could be a monthly candle. So if it's a monthly candle, each week is going to be like one of these sectors. So the whole idea, remember going back to the phrase where nobody really understands it, is accumulation, manipulation, distribution. I can spell. So we have to look at that in any candle. Now this can happen on a 1 hour candle, but the way every candle is made is it has to have an open, and then it either has a high or a low, then a close. And it may sound like, okay, no shit, dumbass, but do you really understand like what's going on there and how to dissect that? Because if you're trying to catch the range, like let's say if you're a scalper, you might do this for an hourly candle, but then you're going to have to layer it in with the daily candle. And you have to layer that in the weekly and the monthly. Now, I don't ever go that far down. I just use the daily for this. But every candle has the same pattern in it. Because if you're trading smart money, you have to believe that there is some kind of manipulation. And most likely it's algorithmic. So if that's the case, you're going to be seeing the same kind of price action over and over again, but on different scales. But most of the time, when people mess this up, it's because they're not using the high time frames. They get sucked into the low time frames, and they hear like, "Oh, I can do the 1 hour candle. Okay, bet, fuck everything else." But let's just say if you're in a bullish day, like maybe you're looking at 1 hour candle down in this area, and you understand that, okay, well, these candles are likely to be bullish because I'm operating in context that I'm thinking the daily is going to be bullish. And if you're on this day, maybe you're over here on Wednesday or Tuesday operating knowing, okay, well, I know that this day is likely to be bullish because the weekly candle is bullish. And you can take this all the way to the monthly and say, okay, well, the monthly chart is bullish. And then I know that we're in the third week of the month and we've started to expand. So these next 2 weeks should be bullish. See how you can layer this in throughout. Now, to be honest, I know I said I was going to do a bearish example. If anybody really wants me to, please type it out. But just inverse stuff because I want to give you guys the best for the time. It's just like me explaining the same thing and turning this candle red. Actually, here we go. We'll do it right now. That easy. That's the same thing. So it's just conceptualizing things that you have an accumulation, which is basically like, let's say if the market makers are trying to come to the table. Okay, let's keep a range so either side is confused. It's going to go up, it's going to go down. No matter which side it breaks, there's going to be liquidity on each side. If it breaks down with volume, there's going to be people saying, I'm going to short this. We're breaking these levels. It's weak. Or there's going to be people saying, shit, I just got stopped out of my longs. What is that? Sell side liquidity. If it busts to the upside, that's going to be people saying, oh, it's breaking out. It's breaking out. Or they're going to stop out of their shorts. So what you want to look at the market from is what is the time of day, or what is the time of what week or what month. You can use this, layer it all together, just like you layer structure together. But if you understand what side of liquidity is being attacked first, and you pair that with what are the higher time frames displacing or reaching towards, and where are the obvious areas of liquidity, that's how you really start to incorporate time into your trading. So that's why you have this bearish power of 3 here. And another thing I want to be clear on, you don't always have to be perfect with time to use power of 3, but power of 3 does work a lot better like that. Hell, I've even seen people do yearly power of 3. Now, I haven't gone into that depth yet. But for instance, if you are, let's just say if you are bearish on this year, well, you would probably want the high of the year to be put in quarter 2. Right? If you are bullish in the year, you'd want the low of the year to be put in on quarter 2. If you're bullish on a month, you'd want the low or the week, so you put in on probably the second or third week. You see what I mean? So it just goes again. accumulation first, then one side gets manipulated. And how do you confirm that's happening? Again, displacement back into this range. This is where a lot of people get messed up because they'll say, oh, this is a break of structure and I'm going to trade an order block right here. And what happens? Price gives them their lower time frame confirmation. But what is it doing? Just moving back up to here, or maybe this fair value gap, and it's going to take them out. And they're going to say this shit doesn't work, but that's just because you're not understanding where you're at in terms of context. Because everything you do in trading is going to be reliant on something on a higher time frame or a higher, bigger picture. You know? So understanding the daily chart, understanding the weekly chart is paramount in day trading. And this is where everybody messes up because they're lazy and they don't want to learn, or they don't want to use the high time frames. They're like, I don't need that shit. And I mean, some people's strategies may not, whatever. There's no be all end all. I'm not telling you my strategy is the best. This is just what I know has worked for me and has worked for a lot of other people. So if this is the case, then we know what to look for at certain times a day. So let's just look at a couple examples. Let's go to regular ES. And I remember a really good example of this happening. I was so mindfucked, bro. I swear, I was like, bro, wait, what the fuck am I looking at? I was like, wait, bro, why is the simulation broken? Anyways, we'll go back to a really good example of this happening. So we're on a 1 hour chart for this. And another thing too, I have a whole class on like the weekly candle formation. So we'll just put timestamps on each day. This is for the weekly. So here's Sunday starting. I don't really usually pay attention to this. We'll go to Monday at midnight. Go Tuesday at midnight. Wednesday midnight. Thursday. Friday at 5 because they don't go to midnight. Or 6, I should say. So you can go a little longer. Friday's maybe a little longer. You could move it back if you'd like. But we look at this price action. Remember, and this is where it gets to the point where people are like, oh, that doesn't look like the little 3 boxes. That's fuck. Yeah, but you have to understand the concept of what's going on. So for instance, on Monday, it's not going to always be, okay, well, I'm expecting consolidation to be a perfect thing that's going to fit into a parallel channel. Right? That's not the point. The point is not to be picture perfect. The point is what's happening. A range, whether it's expansive range or not, is being formed. So you look at this. That's your range on Monday. So what happens on Tuesday? Sharp push out of the range and an immediate push back in. Now, did you get active in this candle? Probably not. And that's okay. But it gave you your bias. Because bias is everything if you're day trading. So you see that price came out on a Tuesday during New York session. There's also CPI this day. And guess where it traded into? One of the order blocks we've been talking about. It took liquidity. It closed above liquidity. So you see how these things all come together, and they're all very important. If you want to be extremely precise, you have to understand where you're at in terms of the candle formation. Because this weekly candle, at one point, looked like that. At one point, this candle looked nice. Looked like a nice bullish candle. And then what happened? Boom. And go look at what happened. That's what it looked like. So if you were looking to catch the move of the week, you got in right there. See what I'm saying? Now let's say if you didn't catch it on this day, right? You didn't catch it on Tuesday. Let's say if you were bearish here on Wednesday, you could have cut a sell early in the morning. Wouldn't have been the most expansive move, but there was a sell right around the time we looked for it. We've talked about this model too in the time efficiency series for the New York session. So again, right around that 10-11 mark, liquidity rate, where do we go? Straight to sell side. And that just came from, understanding bias. Say you shorted on Thursday, you obviously made money there. Right? So everything becomes a lot clearer whenever you understand. I know I looked weird. I didn't put a fucking line on midnight. Everything becomes a lot clearer whenever you understand bias. And time is just a really good tool to help you, develop that bias and can build upon it. Now this can go for daily examples as well. We'll use a Euro USD. I don't know exactly what example we're going to use, but we'll find a good example of this happening. I can't do it. That indicator's so annoying. I won't let you do it on the. Just find a place where we're actually really trending well. Here's a great example. So whenever the market's really trending well, see this, we form a range, and you can use a CBDR. We've went over what that is in another video, but use this range. Right here, you could just use the whole range. And then what happens? Price pushes down under the range. And you see it's not always so picture perfect. It's not always going to be clean. And then as soon as price, this was a massive, massive move here on CPI. Sometimes you can't catch these moves. So I don't want to show a bunch that aren't useful, because I understand that can be frustrating. There's a lot of that. Here's another good one. If you're trading London, this is actually super good. Or even New York. So look, accumulation, manipulation. And then if you're bullish in the day, if you're under the New York open at midnight, you're going to look at this as anywhere under that as a discount. So anything under that, you could be a buyer. You'd be looking for buy models. So what is a buy model? Okay, well, if you come under old lows right here like that, and use your lower time frames to confirm once the price started pushing up, or if you're confident enough in your bias, another strategy is just long. Like, for instance, if you come under sell side, play like a real market maker. Just long that shit. If you're that confident, stops into the low of the day. Because there's a large probability that the low of the day is going to be put in, the lower the high, during the London kill zone. Which is going to be between, I'll screenshot this, and I'll put it in lessons just so you guys can see how I mark mine. And this is actually, I would do that, but it's going to be different because you guys are in different time zones. So 2 to 5. This needs to be fixed to GMT5, but it's 2 to 5 a.m. So if you did that, target the Asian range. You can swing for the fences higher if you use, different daily bias tools and stuff, or like if you're targeting your drawing liquidity. But the whole gist of this is you look for opening price, manipulation moving away from the opening price, and then distribution. So another way you can use this on ES is going to be the 8:30 open. So at ES, and you can use this on everything. You can use this on Forex too, but I really like using it on indices. So we'll find 8:30 open. So on this kind of day, price dumps down. There's buys here. I'll go ahead and tell you there was buy opportunity there. Right? Could have bought there. Or you could have bought when price came back down here at a later area. Could have taken sells up here. But if you buy below this level, or look for buys below this level, or look for manipulation below the level, that's where you're going to find the best opportunities. So, like an A+ checklist for like a ES buy day for me. So I've tried to put this on paper more so I can make a cool video on it and share with you guys, but just off the top, your bias from the daily chart. So are you bull or bear? Are you looking for, higher prices? Do you have an established draw on liquidity that you're very confident in? Okay, cool. If so, you possibly have a trade. If you don't have that, you don't have nothing. So if you have that, then you're going to say, okay, has liquidity been taken? So if liquidity hasn't been taken, then you shouldn't be trading. And for my strategy, because I'm trying to think like, okay, well, if liquidity hasn't been taken, there's always a chance that it's going to be. You know, fuck your structure, fuck everything. If there's been no rate on stops during the session, odds are most of the time there is one. Sometimes there's not. And then when there's not, you get sucked into it and say, oh, dude, I should have taken the long. And that's like the classic death cycle, because then you break your rules next time and now you've ruined your edge. So has liquidity been taken? Now, was it taken into time level or time or price levels? So what does that mean? So for me, 8:30 a.m. and midnight, we talked about this as well on a different class, but 8:30 a.m. is kind of, that's like my premium discount level. It's my equilibrium on a time basis. Now, of course, you're going to have this for your actual price action. You're going to have both. All right, so like for instance, if you look at this right here and say, okay, well, what's the range of the morning? You know, it's not rocket science to draw at that point. Okay, what's the range we're operating within, right? But then if you want to take it another level, you could say, okay, where's the 8:30 open relevant to that? Okay, where is the midnight open relevant to all this? Right? So you would look at anything here in this example, if we're under midnight and under the actual discount of the range, you know, you could be looking for a nice retracement coming out of that range because you're in an extreme discount, right? Or if you're above the equilibrium of on the time or on the price level, and then above it on your time level or above the 8:30 open, you'd say, okay, well, that's an extreme premium. So that right there will help you from getting into trades you shouldn't get in a lot of times, or at least it does me. Because I'm like, kind of like, okay, well, I'm bullish in the day and I'm confident in that. And then we come down and, you know, maybe prices expanded pretty rapidly. Maybe we come down a little bit. I'm like, oh, that was the rate on stop. So then I look and we're not under the, you know, either the 8:30 open or the midnight open or the price-based equilibrium. It can get like, okay, maybe I shouldn't take that. And I've noticed quite a few times that when I don't take those, they would have gotten stopped out, and it would have given me my entry model. So after you decide on what it is that your trade model is, and you've really fine-tuned it and you have a strategy, all that's left is to execute and monitor. So if you can get your psychology strong enough to where you just execute that relentlessly and it is profitable, then you're good. You're solid. There's no work to be done other than logging your data and asking yourself, you know, could this get better? Could I do something that's reasonable to improve this? Is there something I could do that would not necessarily hurt my edge but may sharpen it? And for me, it was really starting to look into time. So hopefully that you guys are seeing, I know it's kind of not as organized, but I think that this is still very valuable in terms of if you understand this stuff. So those three things right there, that simplifies. Obviously, you have your low time frame confirmation. Obviously, we have fair value gaps and break and all that. But like, again, conceptualize things. If you want to get to where you really know this shit, you're gonna have to learn mental formulas like, okay, well, if accumulation, manipulation, distribution is really just, you know, smart money in play, or even Wyckoff in play, then you're going to have to understand, okay, well, if that happens on the daily chart, it's probably going to happen on the weekly chart, or it might happen, you know, on a monthly or yearly chart. And if that's happening, then I can take that same concept and layer it throughout all of them, and then start to really sharpen my bias and really build confidence and build better analysis. Right? Doing the extra homework. And that's when shit that doesn't used to make sense starts to come together and make sense. And then it's like, oh, okay. So we'll look at some examples of some power of three trades just to give you guys some more examples too. I won't go over a shitload of stuff with them, but just to see, so you guys can see some of the ones we've taken publicly here. These are all on daily charts for the most part. So if you look at a monthly. Doesn't look like shit, does it? Does not look like much. Look at the 3 month. What did we really catch with those trades? For the most part, we caught this entire candle. But look, at the one time, it opened. It didn't go much lower than the open, but it opened at the beginning of the year, made a high, and then the close. We still have some time for the close, so I shouldn't say the close. But you guys see what I mean whenever you're catching the entire moves of these candles. And a lot of times it's going to give you price targets farther than you would have. Like, bro, most people that looked at this would not have targeted what we targeted. They'd be like, what do you mean? Why are we? I actually got messages on some of these on like Filecoin, and we're like, why would you target that? Like the structure is obviously bearish, and it's like, but you're not seeing things from a time perspective. You're not seeing things from a power of three perspective. You're not, and that's when people get so sucked up in a lot of these bullshit courses that are out there that people just made to. They didn't really want to teach anybody something. They wanted to make it easy. They wanted to make it seem like it was simple. And I do that too in terms of simplifying things, but what I don't do is just give you some kind of cookie cutter shit that I'm going to tell you is always going to work. Because it doesn't. That's not how trading is. It's just not. You're operating in a living market. It's always changing. There's a lot of different factors that are changing it. So you need to understand everything that comes into play. And another thing with time is you'll notice a lot of times, go look on your Forex Forex Factory. Go look at what week of the month does CPI get released on every week. It gets released on the second week every single time. Now then go back and look at your charts and go back to CPI weeks and tell me how those weeks look. It's going to be manipulation most of the time. So here's another great example. And another thing to look at too. What days do they happen on? They usually happen on Wednesdays or Thursdays, sometimes Tuesdays. For instance, this one was a Thursday, right? This was CPI. It was in the 13th, the second part of the week. What happened after that? Price went down, manipulation, blasted up. So that would be a monthly candle. I'm sorry. Well, this was the monthly candle. So that second week was that low, the wick low. Right there, the 13th. Made that low, rocketed up from there. So you can see how this stuff does work. It can become a little abysmal sometimes. And I don't want you to get like too lost in the sauce with it. But for those who do want to learn this kind of stuff, it's extremely interesting. And it can be extremely valuable if you allow it to, kind of just be a complement to your bias. Now again, structure is still, in my opinion, is what you need to really base everything off of. But time, you gotta take time into account whenever you're evaluating structure. So that's pretty much it for today's lesson. I don't want to beat on a dead horse. I know it's a little short; it's only 12:40. But at the end of the day, I'm more concerned with getting you guys value and making sure you retain it than just talking an extra 20 minutes. But if you guys have any questions, please go ahead and ring them off now, and that way I can answer them while I'm here live. If not, you can always ask me later, and I'll look at the chats. I don't see any in the actual. No, I don't see anything anywhere. Maybe crypto chat, I don't know. Damn, I've been talking for like 30 minutes. I didn't even take a drink of my coffee. Oh yeah, fancy. I'm glad you enjoyed it. I think that was actually a little. That was like 10 minutes ago. Never mind. It was a stock chat. What is liquidity? Goddamn it! I can hear the voice you're saying that into, JL. What is liquidity? It says that shit. Cool. All right. Well, that's it, guys. I'm gonna hop off here. I got a bunch of shit. I gotta go get this.
Thank you for the
This suit.
stream, brother.
Got you, man. For sure. Anytime. Every Saturday. Oh fuck! I just got some in my eye. Real. All right. Well, shit, guys. I will see you guys on Tuesday.
Enjoy your weekend.
Hell yeah. I'll see y'all. Peace.